Thank you very much for, giving people some things to chew on, consider the rest of the session and going forward. And welcome back to F.A.C.E Larry. I've missed you. How are you?
Good. How are you doing? Good morning.
Good morning. We're a little bit older since you and I last talked.
Yeah, but I think you're better looking. So
well,
good to you.
Only my wife thinks so.
Yeah, I've got you.
Anyway, it's great because for a few years we only had one thing to talk about, right? It was pretty much a one-sided market,
right,
most of the time, and you rode the tiger. I know.
Oh, sure.
Every time I talk to you, you were long and you were long and you were long. Maybe you rotated,
right,
but you were long. So why don't you share your charts and tell me if things have changed for you and how you're approaching more of a two-sided market. I know you're long only, right? So
I am. Yeah,
okay.
Most of the time I'm long only.
Okay. Do you want to show your screen and so we can see some of the issues?
Yeah, let's go to share screen. Can you see my screen okay?
Got it now, Larry. Thank you.
And how's my sound? Okay, everything's good?
Yeah, you're clear.
Good. All right, so to get started, so I'm still long.
Okay.
But as you said, I've been pretty active on the sector rotation. So I started to sell out of those high beta tech stocks like Snowflake and SPX back in November and December. Tech started to roll over and I moved pretty strongly into commodities. And right now I'm mixed. So I've been buying tech again. I'll go through some charts and I've got to tell you that, the fundamental news out there, if we just look at the news, there's a lot of reasons why people could be bearish. But if we look at the charts and what the market's reaction has been, the market's reaction has been pretty strong. And the key thing is the Fed is going to hike pretty aggressively. I think.
Larry.
Yep.
Oh, excuse me. I think last Monday was really a great market tell because that's when Powell came out as super hawk.
Yep.
And the market, S&Ps maybe sold off about 25, 30 handles. And by the end of the day, they were unchanged.
Yeah.
And that was really a major test. It looks like that day it came off your red moving average to the point and closed unchanged. See that?
Yeah,
day?
and that's the 50-day. And a couple things. I'll start with the indices, and I'll just go through some stock charts. But what I'm seeing with the S&P is a couple things. It is 6 of the last 8 up days. It's closed right at the highs of the day. So if you look yesterday, Friday, Thursday, here, and here. So it's closed at the highs of the day. And when the market was unwinding, it was fading intraday. The early morning rallies were being sold and it was closing near the lows of the day. So with the S&P back over 4,500, the way that I see it is as long as the S&P holds over 4,350 on any type of pullbacks, because I always expect after a big move like this, I always expect some type of a technical consolidation, or just a reset before going higher. But back over 4,500, S&P's up 8 of the last 10 days. And like you said, the bond market right now is pricing in 2 50 basis point rate hikes, one in May, one in June. The Fed's been, very aggressive and the market just continues to go higher. And what I think it is, I think the market was really concerned about inflation and you saw some of these tech stocks get killed. And I think that the market, even though they know the Fed is behind the curve, just the fact that they're doing something, I think the market sees some clarity.
What do you think of this narrative? And I know you're a thinking man in the market. You're not just, it's over the moving average, and be that mechanical.
Right.
Since commodities have become so hot that commodities take a breather into early summer, while the stock market's making new highs.
I think it's possible. Commodities have had a big breakout, especially crude oil. But what I think the market is starting to possibly price in going forward is maybe a little bit of an economic slowdown, because if the Fed hikes as aggressively as they say that they're going to, then generally that's designed to cool off the economy, which could put some pressure on crude oil. But, when I take a look at the commodities ETF, or when I take a look at crude oil, on crude, it had a sharp pullback, but over 90, I'd give the benefit of the doubt, for my time frame to the long side. But I think it's possible that commodities could have some weakness.
Okay. All right. So tell me what you like.
So we're going to start with tech, and I'll start with a few recent positions. So NVIDIA, pre-market, when I took a look, NVIDIA was about 288 or so, but a couple things here. So it went into a strong downtrend. So stage 4, pretty strong downtrend, but then it started to build a base, held over 200 to 210, 1, 2, 3, 4 times. But then last week, or about 2 weeks ago, along with Tesla and some of these other high beta, Apple's been strong.
Yeah.
But closed over the 50-day, had a big breakout move here, quiet consolidation, another breakout move here. So it's been consolidating over the top of this base. And then this morning, it's testing another move higher. It's got a bullish 20, 50-day cross to the upside. So I see going from stage 4 to stage 1, breakout that held, and I see all of this as very bullish price action. And NVIDIA is a key stock, obviously, for the market and for the tech sector. Apple's been a little bit stronger, barely broke below the 200-day.
And that's what I was looking for. I saw a guy talking on CNBC. Yeah. And they were talking about, I forgot who it was. He said, I think to really clean out the market, we need Apple to close under the 200.
Yeah.
And that would panic people. And then the next day it reversed back over it. And we were off to the races. And Larry, I know, do you follow sentiment as well? At the bottom, no one likes stocks. It was the most bearish I've seen people in equities, and I can't remember how long. There were 10% bulls. No one liked them.
Yeah, that's how the bottoms get formed, is when everybody's just doesn't want to talk about stocks. And I posted a chart last week. It was on Bloomberg, and I think they said that the AAII bulls to bears was the lowest level since the lows in 2008. So pretty much everyone is just mentally washed out. Yeah. But Apple holding up well. So these are leaders. Tesla's obviously been, so I missed this breakout move in Tesla, but Tesla's similar to NVIDIA. So stage 4, stage 1 base over the 50-day, all constructive. Microsoft is starting to show some strength here. So Microsoft yesterday closed at a 50-day high. And what I want to do, Dale, and I think you know this because we've talked for a while, is I try to put opinions aside as much as possible and just focus on what's the market actually doing, because the collective market is smarter than any of us, anybody on CNBC. And for whatever reason, the market's been moving higher. And when I see these leaders like Microsoft, 50-day highs, this is bullish trend action, as opposed to when they were all just getting, constantly sold. So seeing a lot of strength in tech, semis. So SMH, semis got downgraded yesterday by Goldman Sachs, and the group still closed higher. Same thing, back over the 50-day, testing back over the 200-day. So for me, all of this is just bullish price action. Now I will say this. I always expect a pullback at any single time, especially there's a war that's going on. We don't know what's going to happen over there. Something else that's constructive. So the VIX this morning was trading at 1923. So, which isn't on this chart, but that would put the VIX down at the mid-January level. So the key number for me is 20. If VIX can start to move lower under 20, this indicates a lot of volatility that's coming out of the market right now. So these are just all, if I had a checklist for price signals, is it bullish or is it bearish? Everything that we've taken a look at so far, I think is bullish. AMD. So AMD looks like it's just getting started. So I've got a position here, but it was in a strong downtrend below that 50-day. So finally, you can see it's been under the 50-day almost all year. Closed over the 50-day last week on a big breakout move, quiet consolidation. This morning I looked, it was testing about 122. So I think if AMD gets over 125, I think it could open up that chart for higher. So I don't want to talk about just tech. I know we're almost.
All right, I want to ask you about this then, if you don't mind. Let's talk about tech.
Sure.
We've had way exceeded my expectations for this wave in rates in the 10-year to go to 2.5 or better.
Sure.
In such a hurry.
Yeah.
So I'm not impressed with what the financials did with this kind of move in rates.
Here's
is that
the thing.
an avoid for you?
I'll tell you what, I'm not doing anything with the banks, and I focus on the bank, and I'm not sure why. And I had Bank of America and Wells Fargo. I'm not sure why the banks haven't been able to break out, but where I am positioned in the financials. So I've got the insurance stocks.
Okay.
So I've got Berkshire Hathaway, and I got into it well before this breakout, but Berkshire keeps going higher. If you take a look at a stock like AIG, it's near a breakout. If you take a look at Chubb's based in Europe. But so for whatever reason, and I'm sure someone that really understands bond yields can explain it, but for whatever reason, the banks themselves have not been participating whatsoever. JP Morgan is still a bad chart, below the 50-day. The brokers, these are still bad charts.
Yeah. Brokers are broken.
They're bad charts. They're below the 50-day in downtrends. But for whatever reason, these insurance stocks, if you take a look at Allstate, the insurance stocks are very strong. So I'd like to see the banks improve, but they're just not. You hit the nail right on the head. And there's a lot going on in the yield curve, because I think the 2 and the 30, I think it's inverted or it's close. Maybe it's the 5 and the 30. But if you look at the 3-month yield curve, that's as steep as it gets.
You like anything in cannabis?
No, I don't follow that group too much.
Okay.
I will tell you though, what I see from the more speculative stocks is the crypto stocks.
Okay.
And the clean energy stocks, for people that are looking for the high beta stuff, the crypto stocks, even Bitcoin has been acting well, but Coinbase recently came over the 50-day. If you look at these solar stocks like F.A.C.E, where'd F.A.C.E go? F.A.C.E is trying to break out, but what the key thing that this tells me is when the crypto stocks and these clean energy stocks, which are more speculative, when they start to improve on their charts, that tells me that the market's just more comfortable with risk.
Yeah, right. Risk on.
And and I'm watching the commodities. I still got positions in energy XLE. It's had a pretty strong run. I'd like to see it hold that 50-day. I've got the fertilizer stocks. Now, I just took some off the table on Friday on my members site in Nutrien, because these fertilizer stocks have had big moves.
30%.
But I just don't think, I want to be buying it up here. So we'll see, where these correct down to. I think the commodities move still has some legs to it, but they could be open to some type of a sharp pullback after the bigger move. So I've been reducing the commodities, but I'm still holding positions.
Okay. Anything else? Do you follow? I'd be interested. Can you pull up ARK? I mean, everyone's been, all on Kathy Wood for her. Okay, so here's my thesis.
Yep.
S&Ps make new all-time highs.
Right.
She's in so many broken stocks, and there are other broken stocks. I think that Facebook is a broken stock.
Sure.
And Netflix is a broken stock. But isn't it possible that if we make new all-time highs in the S&Ps, all ARK does is correct the decline?
When you say correct the decline, how do you mean? Keep going higher
Maybe
or pull
no,
back?
yeah, like rally back to your moving average at 84. So S&Ps could be at new
Yep.
all-time highs.
Yeah.
And she's in some stocks that have really,
Gotten
70,
killed.
80% declines, that all they
Yeah.
do is recover. They don't make new highs.
Yeah, I think that you're right. So I think a lot of these stocks. So I posted ARC actually this morning because ARC in the pre-market
Yeah,
is
it looks like it's
testing.
going to go.
Oh, it's
Yeah.
testing over the
Yeah.
50-day for the first time since. So if
Yeah.
ARC can close over 70, then what I think is what you said. I think a lot of these stocks are, they're broken for a long time, but these stocks that got hit pretty hard, they could have some pretty sharp recovery moves. But for me, I'm not doing anything. I haven't had ARC, I don't think, in forever. And, I'm going to stay with, NVIDIA and AMD and those stocks that are up here. But yeah, I'm seeing a lot of these broken down stocks. If you take a look at Square is actually a good chart. So Square 280 to 80, I don't know, that's maybe 70% down. But if you take a look at it, it went from stage 4 into a stage 1 base. And now the price has been breaking out over the top of that base, so holding over 130. So here's the key thing. And for your listeners, if we get any really bad headline from overseas, any of these stocks can pull back at any time, 10 or 15%. So I'm not trying to call, that they can't pull back. But, from a trend perspective, when I look at how the overall trend is setting up, I think Square 20, 50-day cross to the upside, 50-day is flattening out. I think Square over 120 is it's an interesting chart.
Any interest in, there's been interest in the uranium stocks because of what's happening in this energy crisis that people may have to go back to, considering nuclear plants. So
yeah, I think it makes sense. I don't have anything there. I've had CCJ on our members high beta list for about 6 weeks or so. I don't do too much with uranium. What happens is I run stops on every position that I take. And some of these charts like uranium, it can be pretty volatile on my stops.
Stop. Yeah.
Yeah. So, so I tend to stick, I've got Devon Energy. I've had that for a long time. I've got Chevron, but I think the energy sector makes sense. But yeah, I think with those uranium stocks, I think you just have to realize that, they can move 20% either way pretty quick. But it's been trending higher.
Anything you see outside of the U.S., or are you strictly U.S. Centric?
Brazil's been really strong. And I think part of the reason Brazil's been so strong is because of all the sanctions that have been placed on Russia.
Yeah.
So Brazil's got a ton of natural resources, metals, mining, crude oil. I will say in that metals and mining group, BHP, very strong, starting to break out on that chart.
Rio Tinto too.
Yep. Vale. So I've got a position in Vale. I've had this for a while. Just strong uptrend, near breaking out. Rio, Rio's improving too. So I like the BHP and the Vale charts better because they're higher. But at the end of the day, they're all going to pretty much, go up or go down together, I think.
Okay. What was kind of unusual and interesting is during this interest rate cycle, how well utilities have held up.
Yeah.
What do you think's behind that? Look at that. It's amazing.
It is. And I've got a low volatility list I put out every week for the members because we've got not everybody wants Tesla, and some people are just looking for slow and steady. And these utilities, it could be a couple things. I don't know if it's their earnings predictability. I don't know if it's that there's a lot of fund managers that don't want to get caught up in commodities and tech and all that. So there's maybe a little bit of a flight to safety there. Maybe the market thinks that 6 months, with the yield curve, the market could be pricing in a slowdown. Utilities generally do very well, when the economy slows down. But yeah, it's a really strong sector.
Yeah, you have to think that if they could perform it with a headwind, what's going to happen when rates subside a bit?
Yeah, I mean, if bond yields come down, utilities should, traditionally, I think they would perform better because of their strong yield. But utilities have been really strong.
And the flip side is a buddy of mine who's a trader says the housing stocks have been getting hammered.
I was just going there and I put all these housing stocks on my avoid list for members recently
Yeah,
because, two things. So the charts look bad. I mean, you can see they've rolled over below the 50-day, but I just can't picture a market where, mortgage rates go much higher and then, home builders or home improvement does well. So, I could be wrong, but the 10-week rolled over, it crossed the 40-week just in a downtrend. And that's one group that I'm completely avoiding right now.
okay. So I would say the majority of what you really like is back to the old guard that led the bull market for many years.
I like healthcare a lot.
Okay.
So I've got Bristol Myers. If you take a look at a chart like ABC, that's
Okay.
holding up well. Eli Lilly and healthcare is defensive as well. So even if we go into an economic slowdown, if you get sick, you get sick. And these healthcare companies, they've got pricing power. They just raise the rates for the insurance companies. But if you take a look at a stock like AbbVie, I mean, and every time I look at AbbVie, I always think the chart is extended.
Yeah,
it's looked extended since here, and it keeps.
Yeah.
But Bristol Myers, I've got a position in Bristol. It's got a nice dividend. It's low volatility. I even for my own positions, a year and a half ago, I was comfortable just holding a bunch of stocks like Tesla, and I'm not as comfortable with the volatility. So I've got, the NVIDIAs of the world and the miners and stuff. But I think having stocks like Bristol, in healthcare offsets a lot of that volatility. And it doesn't matter, what happens with the yield curve. Healthcare, for the most part, is pretty defensive.
Okay, Larry. So people that are hearing us now and seeing your charts or will listen to the recording later, best way to follow your work and become part of your community?
Two places. So my website is bluechipdaily.com. It's a members website. I've got a members Twitter page. I'm on there pretty much from 8:15 in the morning until about 6 o'clock at night. If you go to the top performers page, you can take a look at some of the past, ideas that I posted for members. We got into commodities long before this commodities breakout, but this just tells you a little bit about the technical analysis that I do as far as trend analysis. And then on my Twitter page, it's at LMT978. And I post pretty actively on there, but the real actionable, here's what I'm buying, here's what I'm selling happens on the members page.
Okay. So Larry's a top gun. And if you're interested in equities, he's a must follow at the minimum, and consider his newsletter so that you have some great ideas in equities. Thank you, my trading warrior brother.
Dale, as always, thank you for having me on, my friend. I always enjoy our talks.
Yeah, me too, Larry. You crystallize things in like 25 minutes.
I try to. Yeah.
Mission accomplished, as George Bush said.
Yes, sir.
Remember? All right.
I do.
All right, everyone. Larry Tentarelli, thank you so much. Remember, everyone, don't just count your pips, your shares, your coins, your oil rigs. Count your blessings, and you could join the team in 18 minutes on the Morning Edge, and we'll see you tomorrow. So
thank you. Have a great day, everyone.
All right. You too, Larry.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.